Hey everybody, today's Thursday, the 2nd of June, and the market did finish nicely higher here today. You can see that we've been cradling the volume weighted average price from that April high and fighting this prior low in the S&P 500 and holding above it on a closing basis. So it looks like we are going to test this volume weighted average price up near 420. That is, of course, from the March high and over to the 15-minute time frame. We came down and did what we're supposed to do in an intermediate term uptrend, and that is to make a higher high above a flat to rising, in this case rising 5-day moving average, and continue to move higher there. So we were a little bit cautious because we were below the week to date VWAP, but you can see that it tested yesterday, held as resistance, and then today we pushed up through it. Buyers pushed it right up to the high of the day. As long as we're above this level, about 406.5, I think you continue to give the benefit of the doubt to the buyers. It doesn't mean you rush in and buy the S&P 500 when it's extended from this low, but it does mean, you give the benefit of the doubt to the buyers. You don't try to short it. You're aware of the potential for resistance up at this level, but it's only potential resistance. We'll know only after the fact if it is in fact resistance and what a, short setup from here might end up looking like. Not a prediction, but just a potential scenario. Let's say it runs up towards that 420-ish level tomorrow. Monday maybe even continues higher. I can't draw up there, but maybe it does this early next Monday and then into Tuesday. Then the 5-day moving average starts to look like this. We start to see some distribution, and then as it gets stuck below that flat to declining 5-day moving average, that's where you want to short with a stop up here. There's zero evidence of that right now. I'm simply pointing out how the markets typically work and what to anticipate before you get short. Don't be a dummy and short the rip. That's what dumb people do who like to lose money. The NASDAQ, same story. Looks like it's headed for a test of the volume weighted average price from that April high, March high rather, and this prior low. That, unfortunately, is the bigger concern here for the market overall, is that the NASDAQ is still stuck below that prior low. And because it spent more time in that area versus the S&P, which was just a touch and then go, the NASDAQ, we had more support in here that was then heavily fought. Now it seems likely that it will become resistance. Likely doesn't mean short it. Likely means take your foot off the gas if you're, making new purchases long, and wait and see if the sellers do gain control, because right now you'd have to be a fool in my mind to short this for anything more than a quick intraday trade, and you don't do that, of course, while it's above the daily volume weighted average price. So anyone who shorted in here today in the Nasdaq, I think you're not doing it right. Basically, I won't try to insult anyone and call them a fool, but it's foolish to do until we see something along the lines of this, where we get that 5-day moving average flattened out, this volume weighted average price comes like this, the VWAP off of the Fed comes like this, and then you could even look at the volume weighted average price off of this low and say, if it drops below these, gets stuck below the 5-day moving average, then it's likely to come down to this level, and then we reassess. And that's the way you look at the market. It's about transitioning between the time frames and understand where we are. Where have we come from? We've come from 280 to 315. So it's not low risk new purchases here. Where do we have the potential to go before it's likely a source of supply might become resistance? This isn't resistance. It might be resistance, but there's no one here, anyone who calls it resistance at this point, unfollow them on Twitter, stop following them, stop listening to them. Nobody knows what resistance is until after the fact. We anticipate a potential transition in that area and wait for evidence before we take action and put our money to risk, because the Russell 2000 is back up through that level right now. And similar to the Nasdaq, this wasn't just a one-time touch and go like it was the S&P 500. It was bounce, bounce, hard-fought battle in here, and then sellers took control. Now Buyers are in control for now. We've got the declining 50-day moving average just ahead, the volume weighted average price off this low just ahead. And on the 15-minute time frame, don't fight that trend. It's about multiple time frame analysis. Semiconductors are up to the volume weighted average price from this low. And perhaps they continue to move higher. We've got a declining 50-day moving average. I think you want to be aware of, sorry about that. I think you want to be aware of this prior peak. What we often see is a so-called breakout, then fails and drops back down. So be aware of that. Doesn't mean short, it means be aware because you don't short with a rising 5-day moving average. Biotechs, they're kind of still the worst, but they're not breaking down. That's a good thing. They're definitely still on, probation here, I guess you would say, because they're below that 5-day moving average. And if they stay below it tomorrow, that 5-day moving average will be declining. So they're still an ugly looking group. They're maybe trying to find some support in here, but they've got this prior support, which again was a hard fought level, now potentially going to be resistance. Best left alone. Let other people risk their money creating the support. Once the momentum comes out of an area like this, then we latch on and get involved. Let other people do the dirty work. Why put your money at risk? Trading is about risk management, not taking risk. The financials are stuck below the volume weighted average price off of this peak. It doesn't mean they'll stay stuck below there, but that's the level they're at right now. So we've got a declining 50-day moving average here as well. Be aware, same kind of scenario as the semiconductors. Maybe they run up through this level and up through the 50-day moving average. That gets a lot of people excited. Hey, we're back above the 50-day moving average. Okay, but what's the direction of the 50-day moving average? If I had to take a trade up in here, I would short a breakout. I certainly wouldn't buy it, especially after a move from 32 up to 36. That's just foolish. So again, don't fight this intermediate term momentum. Be aware of the trend. Energy is slowing down, but it's still in a confirmed great uptrend.